Good day everyone, my name is Marcus,
And I'm Jimmy.
and if you're new to the channel, welcome. If you're not, thank you so much for supporting us all this while. Just remember that every like and subscribe goes a long way in supporting our production. Anyway, we are sorry that this week's upload has not been frequent. We have been really exhausted from monitoring the markets lately as well as the circuit breaker woes at home. We are really interested in hearing from you as well, so if you have any video ideas or things that you want in our commentary, please let us know in the comments section below. Also, some of you have asked why we are doing this without any animation, and that is because we want to do it podcast style. Something like Jim Rogan, you know. And we are hoping we can move over to Spotify soon, but we really need your help to grow our channel, so please give us a thumbs up because it really helps in the YouTube algorithm.
Wait, before that, disclaimer. None of the content produced in this video should be used as a substitute for professional investment advice, nor does it constitute an offer or solicitation for investment-related products. It will also not induce the creation of any binding legal relations. Okay, for real now.
Let's get back to today's topic. If you were to look at the dictionary's definition of market capitalization on Investopedia, we see that it refers to the total dollar market value of a company's outstanding shares of stock. It's colloquially known among investors as market cap. The formula for market cap is deceptively simple. It is calculated by multiplying the total number of companies' outstanding shares by the current price of the one share. Let's use DBS, otherwise known as the Development Bank of Singapore, as an example. At the time of making this video, the current price of DBS is at $19.35 per share. Multiply that by the number of shares that it currently holds, and you will get a total market cap. The investment community uses this figure to determine a company's overall size, as opposed to using sales or total asset figures. But why should we even be concerned about a company's size?
Using market capitalization to show the size of a company is important because company size is a basic determinant of various characteristics in which investors are interested, including risk of defaulting, which is defined as the failure of a company to meet the obligations imposed on it by its shareholders. It is also easy to calculate. Take a look at this numerical example. A company with 20 million shares selling at $100 a share would then have a market cap of $2 billion. So it's basically multiplying two things together. Companies in stock market indexes are also typically divided according to market capitalization. For example, on stock market indexes such as the Nasdaq, large cap companies are companies with a market cap of 10 billion or more, mid cap companies are ones between 2 billion to 10 billion, and small cap companies are ones between 300 million to 2 billion. Small cap companies include penny stocks too, which is a concept we will delve in further videos. Again, I would like to remind everyone that these are rough gauges and differs from investors to analysts. Now let's talk about those large cap companies. These large companies have usually been around for a long time and they are major players in well-established industries. Investing in large cap companies does not necessarily bring in huge rewards in a short period of time, but over the long run, these companies generally reward investors with a consistent increase in share value and dividend payments. An example of a large cap company is International Business Machines Corporation. On the other hand, it does not mean that a small cap company is necessarily bad. Sometimes, such small cap stocks are likely to see more volatile price movements since there are many short sellers on that particular stock, and this causes a larger potential for crazy phenomena such as short squeezes. Some people also like to refer to super small cap companies as penny stocks or micro float, which refer to stocks worth less than $1 to $5 on the market. These stocks attract many traders because they are awesome for day trading and scalping.
Although it is used often to describe a company, market cap does not measure the equity value of a company. Only a thorough analysis of a company's fundamentals can do that. What do I mean that? It means looking at things such as the company's balance sheet, its cash on hand, and earnings per share. It is inadequate to value a company because the market price on which it is based does not necessarily reflect how much a piece of the business is worth. Shares are often over or undervalued by the market, meaning the market price determines only how much the market is willing to pay for its shares. In other words, it is the value of the company perceived by the public. And just because a company is selling its share at a lower price does not necessarily mean it's better or poised to grow more in the long run. Furthermore, although it measures the cost of buying all of the company's shares, the market cap does not determine the amount the company will cost to acquire in a merger transaction. A better method calculating the price of acquiring a business outright is the enterprise value, which is something we can discuss more in depth if you're interested.
Again, market cap can be used in many situations as well vis-a-vis other indicators. It is not always the number one indicator, but it is commonly used in both technical and fundamental analysis, so it is definitely a useful tool in your investment toolkit. If you like how we have broke down the concept of market cap so far, be sure to smash that like button in the description below. As promised in the video title, we will also be giving you a weekly update of what the hell is exactly going on in the stock market this week. The previous week saw many things going on, but we would like to talk about Berkshire Hathaway's annual general meeting, with its leader mentioning how their cash position isn't all that huge when you think about the worst case possibilities.
According to finviz.com, the conglomerate had 137 billion of cash and treasury bills on its balance sheet as of March 31st, 2020. When Buffett was asked why he hasn't invested in any companies during the pandemic crisis, just like he did during the 2008 financial crisis, Buffett said, "We haven't seen anything attractive." If you think Buffett is wrong, and we indeed have some companies going at some very attractive valuations, be sure to comment in the comment section below. We are also willing to give a technical breakdown.
Some critics have also touted the idea that passive investing through index funds is over, but Warren Buffett calmly replied to that conundrum by saying, "I haven't changed my will, which directs my widow to have 90% of assets in index funds." This shows that one of the best and most revered investors in the world acknowledges the difficulty of beating the market consistently and places a sizable chunk of his savings into indexes that provide solid returns year on year. And well, if you think this is the best thing he said in the meeting, be sure to smash that like button again. The last thing we would like to touch on, which also happens to be one of the key points during the meeting, was when he said, "The market system is marvelous in many respects, but it needs government. It's creative destruction. And for those who are destroyed, it can be very brutal," Buffett said. While he wouldn't come up with a revolutionary new system, he said that he certainly doesn't want quote-unquote unfettered capitalism. I absolutely love this part from him because this is exactly the sentiment that we have been repeating throughout all the videos we have made. And it is the notion that capitalism is in fact the solution to many of the world's financial issues, because when people are given the chance to advance up the financial ladder by nothing but their own doing and their own hard work rather than having a higher authority decide their fate, they actually end up with better outcomes than before.
This is also exactly why we see companies like Zoom, Amazon, and Netflix recording insane stock market runs during this period.
We have come to the end of this video and I hope I helped to clarify all your doubts. It would mean so much to the both of us if you leave a like and subscribe to our channel. Again, we hope this video has enhanced your understanding of one of the most important concepts in the stock market. Knowing market cap will allow you to make much better decisions on stock selection and will help you decide whether it will be a great time to jump in. I have attached some links to channels and websites from which I took reference from, and you can do more reading in depth if you are interested in finding out more. Remember, investing is a long-term thing, and you must always do your own due diligence before deciding on the stock you want to jump into. I'll be flattered if you had one key takeaway from this video which you can share with your other friends. Leave any questions you have in the comments below and I'll try to answer all of them thoroughly. Stay tuned for the next video, and as always, invest safe.